Hey, Mark.
Hey Dwight, how you doing?
Good. How are you?
Huh?
I'm good. How are you?
Yeah, not too bad. Not too bad. I'm actually, yeah. Are we gonna put a counter or what are you gonna do?
No, the counter is not working. So
Okay.
we're 6 minutes out
I'll just start on the dime.
on the dot. Okay. All right. So I'll let people in like 1 minute before, and
Yeah,
then
that's good. And you're streaming it?
yep, it's on YouTube.
All right, thanks, Dwight. I appreciate it.
No problem.
All right, Dwight, are we live? Dwight, do you hear me?
Yeah, Mark, we are ready. You're good to go.
Cool. Okay. All right. So welcome to the second of the 4-day live trade execution webinar series, subtitled How to Capitalize on Monster Moves in the Markets. Today was a great example of that. My name is Mark Shawson, the pattern trader. Kind of hard to know where to start, hard to kind of keep my thoughts all kind of collected here. So why don't I just share with you what I did today, and then we can talk about it. So I talk about capitalizing on monster moves in the market. So I shorted Tesla at 1,040, and today it hit 870. So here are some of my positions. I'm short 3,000 shares of Airbnb. I think it was down $6 or $7 today. I shorted Microsoft just before the close because it's an earnings play today, and I just closed my position out in the market, and I made $8 in about 2 minutes. I'm also short Restoration Hardware, and here's my position. Now, this broker doesn't really show my positions marked to the market, but I'm up I don't know, at least $100,000 on this position. And then I shorted some Visa into the when it opened. So it opened up about $10, and I just shorted into that. I've been long these UVXY calls, the 1550. I bought these yesterday at the close, and they're up over 130%. And then in the aftermarket, the UVX, it's soaring. So it's trading at about 1775. I bought the 1550 calls, so I'm about 220 in the money. I bought these for about 90 cents. So hopefully I'm going to make about 300% of my money. I probably will blow some of these things out in the opening. Hopefully we'll keep that. I also shorted F5 just before the close. It also has announced earnings. You can see F5 is closed at 194 and is trading down between 184 and 188. So I do, bet on these companies right before they're about to announce earnings. It's a very speculative thing to do, but I've made a lot of money. Just give you an idea of the capability of this aftermarket is that I shorted TXN probably 2 minutes before the close at $169.82. And literally 5 minutes after the market closed, this company announced earnings. It dropped like a stone. And I made $14, literally in about, I don't know, the space of less than 10 minutes. So I opened that thing and closed that thing out and made $14 in just less than 10 minutes. So it's amazing how powerful these markets are. So you can see Tesla closed at $876. You can see right there, down $121 for the day, and it's down about $7 in the aftermarket. So there is an aftermarket session that is very, very robust. And you can see here are the UVXYs. These are, bought these when they were trading at about 1470 last night. When it looked really ugly, I bought the calls. And now we're trading at 1775 based on a lower market. So also Google announced their earnings just a moment ago, and Google's down about $120. So I have been talking to our members and alerting to them that we are, in a bubble, that we have been and are likely in the throes of a massive bubble. This was going all the way back to an email. I don't have the date here, but it was late January. This was in late January. I don't know why there's not a date on this thing. I must have erased it. But I was saying since last February, and that's not this February, it's about 15 months ago, I've been alerting our members to a brooding storm across all asset classes. So with the NASDAQ down 12%, the S&P down 7%, the questions most investors mind, is the selling over? I said, in my humble opinion, the answer is hell no. I said, frankly, I think it's just the beginning of the selling. And so the indexes have been driven to all-time highs principally on the backs of a half a dozen stock: Apple, Microsoft, Google, Amazon, all of which announced their earnings this week. And all of these stocks, which have been holding the indexes higher, are now rolling over. I said, at the time, and this again was about 3 months ago, I said, I believe we are in the vestiges of a late stage asset bubble. And I said, we are starting to see the cracks and fissures in the mega cap stocks. And this is just starting. So, I've been saying this for about 1.5 years now, shorting Zoom and Peloton and Beyond Meat and a whole bunch of stocks. I've been warning of, sorry, I'm trying to find my emails here. This was this week's, sorry, I got to just get rid of some of these. I must have erased it. Oh, this was on Tesla. So also in January, I've been starting to warn that Tesla was in the throes of making a huge top, that this was likely going to be a parabolic implosion. And I think today we're starting to see the first signs of that, where Tesla rolled over. And this is what happened just today. So we were talking about this yesterday. I told you I short Tesla stock. And the reason why I'm short is that I see a whole bunch of bear price patterns. Now, remember, I look at the prism of investments purely through price action, price patterns, and price action. I'm not looking at the news. I'm not trying to play an armchair economist. I'm not trying to second guess the Fed. I'm not trying to predict where inflation is going to go. I'm not trying to understand the balance sheets of these companies. To my mind, the market actually points to where it wants to go. And I started getting short Tesla right here under this inside bar. So I look at, whenever I open it, it can be any chart. This is Tesla TSLA. And kind of just blow this up a little bit. And to my mind, the price action starts telling a story. So if you're just looking at this on a purely, you just open up this chart, it looks pretty random. So to the uninitiated, you open this up and you go, well, this is just back and forth, and it could be here or it could be there. And I've been saying to our members for a long time that this stock is going south, that it's going to go lower. Even though it announced phenomenal sales, it had an earnings report just about 3-4 days ago, and announced blowout earnings, blowout sales, blowout whatever. To me, those things don't matter. It's how does the market respond to those things. And so I have been looking at Tesla through the prism of these very bearish price patterns. So you can see that there's a small double top and head and shoulders here. Now remember, the head and shoulders is exactly what it sounds like. It looks like a man or woman's head and shoulders. So you see a double top and head and shoulders there. Then we had another double top, head and shoulders there. Then we had another double top and head and shoulders here. And so collectively, all of these price patterns start indicating a distribution. People are actually getting out up there. The big money is getting out. So while everybody is foaming at the frothing at the mouth, thinking that Tesla's going to 1,500 or whatever, the patterns tell you that this is going to roll over. And then recently, you had this double top and another head and shoulders. And I was saying so in the morning I do a session before the market opens. And before the market opens, Tesla was, trading up there around $1,000. And I said, if we break this area, and I don't know why I didn't add to my position at 870, that we were going to go a lot lower. You can see that there was just a lot of support here. And once we broke that support, this was going to go straight down. And that's exactly what happened. But again, it's a little bit more complex than that. So you see the double top price action here, and then I look at what I call the quality of the bars. So if you look at the bars within this double top pattern, you can see right at the top here, this particular day, it made a new high, but by the end of the day, it closed on the low. So you can see it went to a new high, but at the end of the day, the sellers were in control. And then when it reattempted that high, it made a new high, and by the end of the day, it closed on the low. So I look at both the pattern and the price action within the pattern. And then this is where I got short, where I saw a combination of this reversal and what I call an inside day bar. You can see literally the range of that day sits within the range of the prior day. And what this says to me is that this market looks like it's topped, and this is just a coil day. So this inside day where it kind of doesn't go anywhere, to me, that's just building energy. It's just building, building, building energy. And then by virtue of the collective patterns, I discerned that the energy was going to break that way. So I started getting shorted around 1,040 up here. And I don't know why I didn't add. I've been actually pretty conservative because of all of this volatility and what have you. But, you know, I estimate I made over 100 grand today. So I can't cry, you know, over spilled milk. But I you know, usually have much bigger positions, and I should have added to this as it went in. Certainly under today's low was a place where I should have added. But that being said, there's going to be plenty of other places to add to this trade, as I think it's just really getting started. So I think you're starting to break these lows. So you can see that this was an area where, you know, this is an area where it retraced to. And so this is kind of the first area of support. This is now the second area of support. And then bit by bit, the legs are going to get chopped out of this trade. And so if we peel back and look at what's going on Tesla on a larger basis, this is a weekly chart where each one of these price bars represents 1 week. And what I've been talking about is this concept of a parabolic implosion, where Tesla has really been like a parabola, where prices just go up extraordinarily quickly, literally from $100 to $1,200. And this has been meteoric. But typically, you know, it's like a bully in the schoolyard. The bigger they are, the harder they fall. The quicker they go up, they usually come down in the same way. Now, I've been a holdout. I've been saying this for a long time. You know, Elon Musk is a genius, but not even he can defy the forces of gravity. And so you can see that Tesla has been kind of hewing to this uptrend line. And now we have a series of bear price patterns. So you can see that we have this double. Can't say it's a double top until it's actually confirmed, which would really be, through this neckline around 700. But I can use my imagination. I think we're going to go and kiss this line, which is around under the 800 area. And when we do so, it could open up just a huge opportunity for this thing to go lower. So I do think that if you look at, again, both the pattern and the quality, what I call the quality of the bars. So if you look, sorry, wrong color. Sometimes I just try and find colors to create some contrast here. Made a new high, close on the low. So now remember, this is a weekly chart. Each one of these price bars represents 1 week in time. And you can see, even though this ended up blue, it's still, closed at the lower part of the week. So you can see we had this little double top in this area with these price reversals. And then you have these reversals here, made a new high, close on the low, made a new high, close it. So every time this went to all-time new highs, by the end of the day or end of the week, it was on the low of the week. So every time we went to these new highs, extraordinary highs, captured our imagination. By the end of the week, the sellers were in control. So, instead of listening to the TV, listening to all these analysts, you know, a lot of these guys put $1,500 target on this thing. I'm looking at what price is telling me. To me, price is the news. Everybody asks me, do I trade the news? Do I trade them and the short answer is no. All that I trade is this chart. And again, this is what we call a clean or a naked chart because it has no indicators. There's no volume down here. There's no moving average through here. There's no MACD going through here. There's no RSI. There's no Bollinger Bands. There's nothing but price and time. And so to me, a picture tells me 1,000 words, just like the old adage. And from this picture, I've been able to extract hundreds of thousands, probably millions of dollars, just trading up and down based on these little squiggly lines. And so what I'm able to do is break apart this and put some kind of structure. So when we look at this thing, you know, to most people, this looks like, well, it's just going up and down and, you know, I should just buy. Most people are buying the dips, right? So I'm hearing a lot of people behind me here on these analysts saying, this is a great buying opportunity, whatever. This is a bubble. The party is over. And I've been saying this for a long time. You know, we're going down. And, you know, it's not about interest rates. It's just, you know, the market's become a force of nature. Now, yesterday I was talking about this ETF. This is kind of a mutual fund for tech stocks. And again, tech is what, you know, led us up, you know, in this huge bull market. And it's also been the first to really come off. Now, people, you know, get hypnotized and they get programmed, you know, for the past 10, 15 years, you know, these stocks, Apple, Facebook, Netflix, Amazon, Google have fascinated us. They just keep going and going and going. And so we're kind of programmed to feel like, well, this is just this paradigm that, you know, yeah, they come off. And every time we've seen them come off in the past, they've been great buying opportunities. Well, guess what? Party is over. FANG is over. This is not a short-term thing. These markets are telling us something very, very ominous. Now, you know, I started thinking about this today, and I'm going to, you know, age myself again. You know, back in the 60s and 70s when I was very young and still just starting to study the markets, there was this group of stocks called the Nifty 50. Anybody remember that? You know, like Eastman Kodak and Polaroid and IBM, and Rachel says yes, and Lion says me too. And, you know, the point I'm making is that Thomas is too old for me. So there was, back in the 60s or 70s, there was this group of stocks, they were called the Nifty 50. And just like today, you know, the programming was you could buy these things at any price. You could buy it at a 20 multiple, a 30 multiple, a 50 multiple, a 70 multiple. Just average in over time, you are going to get taken care of. You know, fast forward, you know, 50 years, half of those Nifty 50 are gone. You know, some of them are still around, like Procter & Gamble, maybe Johnson & Johnson, Coca-Cola, and, you know, they're doing okay, but half of them are gone. So the point I'm making is that we've romanticized these FANG stocks as these evangelical saviors of our portfolios and of the world. And now we've, you know, had this dip and everybody's saying, well, this is just a great buying opportunity. To me, the selling hasn't even started. You know, when I look at this chart, I see, you know, this head and shoulders right here. Looks just, again, like a man or woman's head and shoulders. But to my mind, the case could be made that if you just peel out and look at this on a big global basis, you know, this whole thing looks like a head and shoulders, which means we're just starting. So, you know, yes, there will be all kinds of short covering rallies. These things, when they go up very quickly. but all they are, you know, short-term, you know, rallies in a bear market. And I think that's all we're going to have, that, you know, you just need to sell the rallies. You know, buying the dips now, you're going to get killed. You know, here we're at new lows and everything's, well, you've come down 4 days in a row, on and on. So there's also another pattern that comes in here. I talked about it yesterday, this ascending, broadening price pattern. And this is defined as prices going up throughout the pattern. They start out narrow and then widen or broaden out at the top. And then once that cracked, it basically told us where our, you know, take profit on this thing. And it's right at the beginning. So I think we come back to at least 270. But, you know, to my mind, you know, bear markets usually overshoot, and, you know, we're likely to go a lot lower. So this thing is just getting started. And now we're starting to take out these February, March lows. In fact, I think we just did today on IGV. So, you know, back in March, I was hearing all these analysts saying we put in a low. This is likely, you know, going to be a low for many, many weeks and tradable low. And you can see it just died. And this is, you know, what is happening in the market. Now, you can analyze it through a prism of these guys and try and break apart PEs and say, well, you know, these things are starting to come down to, you know, multiples that, you know, look, you know, like their value and whatever. And if you do that, again, I was listening to all these people saying buying Netflix the other day. And, you know, it's like trying to catch a falling knife. This thing's gone from 700 to 200, and I think it goes to 100 from here. So all of these charts are broken. When you look at this, you know, as just as an, you know, an investor, whether you're in this market or not, if you look at something like this, you got to be frightened. This is telling you a story that something is broken. These markets have now, you know, been seriously broken, and you don't just, you know, put this omelet back together again. You know, this is PayPal, and you know, I can show you stock after stock. It was $320. Now it's at 80. I think tomorrow it has earnings, and it'll probably go to 70. So this is what's happening in the market, and you know, it's just previews of coming attraction. There's something very wrong. This is a bubble that's been inflated by a ridiculously stupid Fed that has just stimulated it and created an asset bubble. And now it's going pop. It's already gone pop. People say, well, you know, I wonder if the market's going to crash. It already has. This is Zoom. It's dropped from $600 to 98. Probably get cut in half from here. And these, you know, it's just stock after stock after stock. So I have been alerting our members to Zoom and Peloton and Beyond Meat and all of these opportunities for many moons. And I do not think that it is over. People say, well, what about Facebook? You know, it's at a great value. If you look at it on a PE basis now, they're saying maybe it's an 18 multiple. But to my mind, you know, it hasn't even started. As crazy as that might sound. So to me, you know, I sold it right here into earnings. You know, I alerted our members. I actually bought these puts. I bought the 300 puts when it was at $320 the day before earnings. I bought them for $5. Now, I was $20 out of the money. It was trading at 320. I bought the 300 put, so it had to go from here to 295 for me to break even. As you can see, it went straight down. These $5 puts, I sold them for $80. 5 to 80. So I was not diluted by, you know, Facebook. I made just all kinds of money shorting Netflix and Facebook. And I, you know, told our members before this. So this is not like looking at a chart and saying, this is what I would do and what have you. I was there. I bought put options right here. And, you know, made 12 times my money or something stupid, 15 times my money in a day. But, you know, when I look at this chart, you know, I just see this double top. It's a distribution. People are getting out. The smart people are getting out and handing it over to the retail traders who are being sucked in by people like that who are trying to tell you to buy this thing. And they're still trying to tell you to buy it. And when I look at this, it looks like a head and shoulders. And it looks like these shoulders are just starting. This is just breaking this neckline. So I think this thing gets cut in half from here. I mean, it sounds extraordinary. You know, Facebook goes from 380 to 180. You know, it's an institutional stock. It's owned by sovereign wealth funds in Bahrain. And, you know, how could this happen? Well, it can happen because, you know, people get sucked into the BS, this whole environment of NFTs and cryptos and meme stocks and all this stuff. This is just signs of, you know, excesses that I've never seen. I've been around a while. And, you know, when I look at this stuff, it's just crazy. You know, where I live, everybody's driving a Lamborghini and, you know, living in a $5 million home. This is not reality. This is all I look at, you know, to make a lot of money. So yesterday I was talking to you about this crazy upside down. This is an inverse. Now, sometimes, you know, I would say like the market's like a magician, right? It does a little bit of a distraction, right? So this is what it looked like yesterday when I was buying these call options into the close. So forget about what happened today for now. This is what it looked like yesterday. So yesterday, this market made a new high and then closed at the low. But I would say you can't trade these, you know, reversals in a vacuum. You've got to look at the context. You've got to look at the pattern. What is the pattern, the governing pattern that is likely? Now, this is so this is what we call an inverse ETF. So this will go up when the S&P goes down. So if you want to bet on the S&P going down, you would buy this. And so what I did into this crash, as it was making new lows last night, I was buying these 1550 call options for 92 cents. And today, I don't know where they closed, probably about 260. I don't know where they closed. And they're much higher right now. Let me see where these things closed. So I bought the 1550s yesterday right here. They closed at 250. I bought them for 92 cents. So I've made roughly 3 times my money. And they're going to open much higher tomorrow if they hold these gains overnight. These things are up huge in the aftermarket. Let's see. So Tesla is crashing in the aftermarket. You can see Tesla's down another $15 while we're speaking. So I've made $15 on the webinar in the aftermarket. So the point is that I would say that the market is like a magician. It doesn't show you its intentions right away. The magician just doesn't come out on stage and take the rabbit out of the hat. He's always like distracting you with his one hand while he's pulling the rabbit out of the hat with the other hand. So what I'm saying is, if you understand what's driving this thing, and you know, it sounds pretty arrogant, but to me, what I was looking at is that there's this bottom here, and then we came back and made another bottom here. And then yesterday we broke out, and then we retreated to the neckline. So this is what typically, you know, patterns will do. They'll form a pattern, they'll break out, everybody will get excited. It's just like the first soldiers in a war, they get sacrificed. So everybody gets excited, you get this pullback, usually to the neckline here. And, you know, again, I was betting that the S&P was going to go down. So, you know, you could get sucked into this. If you're looking at a 15-minute chart or even it looks pretty frightening, it's going down. I was buying, I bought 3 times yesterday. It was 15.25, it goes down to 15, I bought more, it goes to 14.85. I was just buying more because I was pretty convinced that the S&P, by virtue of the price action last week, is done, is toast, is finito, is going lower. So if I think the S&P is going lower, then I'm going to bet that this thing's going higher. And so I bought these things at 92 cents, and today they closed at 250, and now they're up 80 cents in the aftermarket. And, you know, I could be making 400%, you know, on that 92-cent investment just 2 days ago. So this is, so one day there was a hockey game with the great Wayne Gretzky, probably the greatest hockey player that's ever lived. This was up when he was playing in Edmonton, and the lights went out during the game. And, you know, during the time, the broadcaster thought, well, this is a great opportunity. I'm going to go down. I'm going to speak to, you know, Wayne. So the broadcaster goes, sits next to Wayne, sticks a microphone. He says, Wayne, I don't understand. You're not the fastest guy out there. You're not the strongest guy out there. How is it that you're able to score, you know, more goals than anybody else? And he said the most profound thing that, you know, the simplicity of it, and you know, when you apply it to trading, it actually still sends chills through. So Wayne said, I don't skate to where the puck is. I skate to where it's going to be. And so that is very true in trading, because the markets will do everything they can to suck you in, take you in the wrong direction. And so, you know, if you understand the patterns and the trend and what's driving this thing, you know, remember what I said, you know, it's like, I like to believe that I can spot the great opportunities, but really what the market's all about is avoiding the traps, avoiding getting sucked in, you know, where, you know, you get sucked in, you go, well, this is just going right back, and, you know, where it always is. And to me, you know, I'm looking at, you know, the patterns of this, but also the patterns on the S&P. So this is, again, a bet that the S&P is going to go down. So if the S&P goes down, this will keep going higher. And so to my mind, the S&P topped last week. So if I see that and I believe that, then, you know, that's how I'm able to make 400%, you know, on a bet this week, by understanding what happened in the preceding time and really what is going on in this thing. So you can see the S&P has been like an EKG, just been going everywhere, nowhere. It's really been a masking. So the S&P up till just a few weeks ago was just like 2 or 3% off its all-time high. When Zoom and Netflix and all these stocks were down 50, 70%, the S&P was just down 3% here. And you go, well, how the hell could that be? Because it's just a masking, it's just a mirroring, and it's just all these big stocks that are holding it up. And once they roll over, it's game over. And that's what's starting to happen now. But you can see right at the top, these were the patterns. So this to me is the governing pattern. All this is garbage. That is the distraction, the magician kind of doing its, you know, his handshake here while he's pulling the rabbit out here. And then, you know, I do believe that this was the price action last week, this huge key reversal on the daily and the weekly. We broke this. We had a huge double top here, and now it's over. Now we've made a huge top. This whole thing is just a big head and shoulders, and we're going down. And so, you know, once you understand that, then, you know, I'm able to transfer that into, you know, you can see you had a misdirect yesterday in the S&P. You went, you know, down for a few days and it went up. And this is what I'm saying. These short covering rallies, they can be very acute. I mean, they can be diabolical. These short covering rallies can be just hellacious. But that's what they are. They are just sucking you in, you know, and you get all excited. This thing's going straight up for days and weeks. And you go, well, how can this not be a big, bad bull trend? And then you can't stand it anymore. You buy it there. And then all of a sudden you're sucking wind here. And it's, you know, you have to understand this. So this is really what it's all about. kind of understanding the big picture. And you can see it in the euro, you can see it in gold, you can see it, happening in other things. So the stock that I'm looking at, I mean, I think you could basically short anything. And that's the other thing. You have to be comfortable with shorting stocks. Most people don't understand that. It's kind of a different mechanics. It's not like FX where you just sell something. Although you don't have to do it, your broker does it. But most people only buy stocks. They're always looking for dips so that they can buy it. And to my mind, if you're not comfortable, shorting stocks, you probably shouldn't be in the market. There will be times when obviously the market goes up, but by and large, I think this thing's going to keep ratcheting lower. And so this is the stock of Airbnb. I'll go to the weekly in a moment, but you can see that again when I pull up a chart. I'm not really looking at buying or selling something that's kind of going sideways. I'm looking at something that's going to make a move one way or another. And so I do think that Airbnb is on the cusp of making a move. And so this is what I see. Even though, it looks like we've been going sideways, really we have been going lower. You can see that we've had just these lower highs. So it's just been kind of going in this ricochet sawtooth manner, but it is ratcheting lower. And now I think it's, ready to pick up some steam. So along this downtrend line, I see this double top price pattern. Again, looks just like an M top. And then, we recently cut through and closed below the neckline. The neckline is simply the line that runs through the entire pattern. You can see we closed underneath that. So now this is, again, what I have a 5-step process, and tomorrow I'll kind of expose you to my book, which kind of lays this out in more detail. But when I look at a chart, there's 5 elements that I look for. One is, what is the phase or the condition of the market? And I should write this out before. And by and large, this is, if you look at this thing, from November, it was trading at 210 and now it's at 150. So I think we could say that this is in a downtrend. The second is, if I identify the phase, then I said, is there a chart pattern that I can identify that confirms this environment, this phase? And yes, here is this double top. And then once I kind of identify the phase and the chart pattern, then I look for a day or a set of days, what I call my insurance day bars. Now, this is something that, I kind of came up with. And the reason why I call these bars insurance day bars is because these bars tell me when I can join the trend and also where my risk is. So to me, that's the holy grail of trading. There's a lot of unknowns in trading, but if you know where your entry is and you know where your risk is, you're already 80% ahead of the game. So I define this insurance day bar as two forms. One is what I call a key reversal. And I'm going to offer my book tomorrow, and you can kind of look at this in more detail. And what a key reversal is basically I look at how does something close relative to the high or low. So you can see that at the very high, this thing made a new high and closed on the low. And when it came and made this double top right up here, it did that again. Closed right on the low of the day. So that's what I call a key reversal, where early in the day it made a new high. By the end of the day, it closed at the low. And you can see that these are large ranges. So it's a reversal that is key. It's important. It tells you that this, it actually points that this thing was ready to go lower after that double top pattern and those 2 key reversals. Now, the other definition of this insurance day bar is an inside day bar. Inside day. And what do I mean by an inside day bar? Well, it's exactly what we have today. Here is an inside day bar. You can see that the daily range from high to low today literally sits within the high and low of yesterday. So what this tells me is that this market's going down. I see a chart pattern, and now this inside day bar to me suggests, kind of a coiling, a building of energy. And I'm surmising the energy is going to release in the direction of the trend and the pattern. And so then I layer it with an execution, which then, step 4, requires me to put a sell stop order under the low. So today's low was, call it 152.75. So you could just put a stop sell order tomorrow at 152.5. Put your risk there. So now you know what your order is, you know where your risk is, and now I would be looking for new lows on this thing. And so, I think this now goes back under 130. So this is my kind of 4-step plan. If I'm looking to buy, something, then I would put a buy stop instead of a sell stop. These are just resting orders. And the beauty of these resting orders is that it doesn't require you to do anything other than just put the order on the platform. You just put the order in and then you don't worry about it. So if tomorrow, so you come in, you put your sell stop at 152.50. And tomorrow, let's say it opens and it goes straight up. Well, the beauty is now you're not executing. Now, yesterday I told you that I thought Morgan Stanley, would go higher. But guess what? It didn't. But the beauty is that my members weren't put into that trade because I said put a buy stop at 85.45. So I require the market to confirm what I'm looking at. And you can see that the high today in Morgan Stanley was 85.22. So it never got to the buy stop, and I was never put into that trade. And so that's the beauty, is that it's a layered, wow. So I made a whole bunch of money on F5. I sold this thing before the close at 194, and it's trading at 173. It's $20 lower. So during the course of this webinar, I've made $20 in this stock, F5. I shorted it right there at 193.91, right before this webinar. And a half hour later, what have you, it's $20 lower. So how did I know? I didn't know what the earnings were going to be, but the market, I had no clue what the earnings, and it doesn't even matter if I did, because the market can have great earnings but lower guidance, or the market could have great earnings but the market environment's terrible. So there is no certainty. Even if somebody put the numbers in front of me, there's no guarantee on the outcome of that trade. And what I look at is going into that is what. So this was F5. This was where it closed today, 194, and I shorted it right on the close, right before the earnings. Now, I surmise that, the earnings, people ask you, do I trade the news? No, but the news to me is just a catalyst to send where this thing is going to go. Now, this has, again, all of the ingredients of everything that, we have the double top here, perfect double top. And then you have this head and shoulders. And then actually this whole thing is a head and shoulders. So this is kind of like the IGV, where you have a small one and a long one. And so this whole thing is a double top head and shoulders. So this whole thing looks like a top to me. So now we're trading down here. This is where it's trading now. Now, how did I know that? It's like Wayne Gretzky. Don't skate to where the puck is, skate to where it's going to be. How do I know that? Is because the pattern tells me that this thing is over. So that's really what I have to say today. So, you know, you're seeing me trade every day on live things. I've been short Tesla since 1040. I bought the UVXY 1550 calls when it was at 1480 yesterday. You know, I shorted F5. I wish I shorted Google. I didn't short Google. I shorted Microsoft, and I just booked my profits in the aftermarket. I'm short some Restoration Hardware, which is down in the aftermarket, it looks like. I'm short Airbnb, which is down $3 in the aftermarket. And I'm short Airbnb. And yeah, so I just show you, this is what I do, is look at patterns. Pattern equals trajectory. It's not always as simple as this week, but, you know, and I told you that this was an important week, that this is when all of these big guys are, you know, announcing their earnings. And this is what's going to send. So this was Google before the earnings. And now it's $100 lower. And then I think tomorrow is Apple. And you can see that Apple is kind of tracing out this triple top here. And, you know, I surmise that it's going to go the way of the other market. So even if it rallies in the aftermarket, I would probably short into it. But Apple is kind of the strongest of all of them. But when this rolls over, then the rest of the market's going to be in trouble. And you can see we are a hair away from breaking this long-term trend line. And then all hell is going to break loose. So Apple's a little bit harder to handicap, but I can surmise that, you know, we are building a top here. I think this tech trade is over. I do. And, you know, this is the tendency as we go into this denial. We've had these stocks in our lives for 10 years. And we think, wow, this is just the greatest bargain on earth. No, it's not. Raymond says this is very informative. I'm learning so much in these webinars. It's all starting to click. Thomas says Apple is on the 28th. So I don't even know what day is this. Is that Friday? I don't even know when. And then I think Amazon is on Thursday. And that's something I probably should have started shorting Amazon today. Because it's in my mind that this one I definitely want to short into the earnings. So Amazon has been what I call dead money for over a year. So what I mean by dead money is that if you invested, you know, a year ago, you're actually now underwater. You've held it for all this time and you're actually in a loss. So this is what I call dead money, where it's just gone nowhere. And I think now this thing is about to really break lower. And here was just this very simple double top. Here's a head and shoulders. You've kind of cracked this neckline and closed under it. And now this is the last vestige of support, a hair above, call it 2650. And I wouldn't be surprised, you know, to see Amazon do that after the earnings on Thursday. You're welcome, Steve. Puts are expensive on Amazon. Yeah, I don't really play the options on these things. They're just way too expensive. You can do put spreads, you can do other things, but to buy naked, too expensive. But that's what I thought about those Facebook puts. I just thought that was just throwing money into the garbage. I bought, Facebook puts for $5. I was $20 out of the money, and I had like 2 days to expire, and the thing dropped $80 overnight. So, sometimes what looks expensive today is going to go a lot more expensive by Thursday. So I just, sell the stock short, but that's also very, you're exposed to unlimited risk. If you're short the stock, it can go, unlimited lengths higher. This is what happened to the guys in GameStop. Literally, hedge funds were wiped out. They were short the stock at 5 and it went to 500. So this is not fun if you're short. Be short of $5 and it goes to 500. So this is the problem with being short. So caveat emptor. This is why I'm very reticent to talk about earnings plays. I take these stupid risks, but it's great when it works out, but all it takes is one time for you to get crushed. So I'm very reticent to talk about it. But to me, I do these earnings plays when I see something like F5 where the pattern is just so predominantly, seemingly compelling. So looks like Airbnb is cratering in the aftermarket here. So this is, I've been looking at Airbnb for a long time. And when I look at Airbnb, it's got a pretty short history, but the whole history looks like a distribution. Looks like this has just been, people getting out from the beginning. This was the case with Coinbase and all these IPOs. These IPOs have, all been stinking turds of crap that were conceived by their promoters. The insiders made a ton, and now the stockholders are going to be left holding this steaming turd. So to me, this whole thing is a distribution, meaning that everybody's been selling here. And so, I think once it gets under these lows, which is around 130, that it'll get cut in half from here. So, to my mind, again, it's like Wayne Gretzky. I don't skate to where the puck is. I looked at this as an opportunity to get short and go the other way. Tom, good luck with those puts. Thanks, Ishmael. Appreciate it. Lawrence says, hi, Mark. I'm not sure of all of what you're saying, but I think I seem to understand what you're teaching. By the time I buy your course, I should be fine. Thank you and your team. You're welcome, Lawrence. If we can help you out, let us know. Simon says, beautiful to know that we can put multiple layers of orders. I hate crypto platforms. I want to trade stocks. That's why I'm here. Anybody can point me to the right platform. Thanks, Rafael. Appreciate it. Do you think the reason that Amazon and Google are splitting their shares is for this reason? So, I ask a lot of, things in trading, mostly where, when, and how much do I have to risk? The last question I ask is why. Doesn't matter. It's like that old joke, a stockbroker calls his client and he says, I've got some bad news and I've got some good news. And the guy goes, okay, give me the bad news first. And the guy goes, well, the stock we just bought you a couple of days ago is down 90%. And the guy goes, geez, what could possibly be the good news? And the stockbroker goes, well, it's down on lower volume. So the reasons why have nothing to do with, it's all about timing and risk management. Why something's going, I could give you 1,000 reasons why this is going to go up and 1,000 reasons why it's going to go down. So the why is to sound intelligent at a cocktail party. To me, the why is right in the price. So I don't ask why, Google's splitting, if it will have an impact on the stock. The market will tell me. So when something happens, the market is the referee, right? So Amazon announced a 20-for-1 split. I don't know why they announced 20-for-1, because by the time this thing goes down, it's going to be a $20 stock then. So But you can see that the market went up, in that news. But to my mind, this pattern told me that we were likely to go down independent of, the split and whatever. That's just distraction. Again, that's just the magician doing his thing. All of the why is answered right here. Is its cloud business doing well? What are fuel costs, doing to its bottom line? What are labor doing to us? I don't know, but all I know is this is telling me a very negative story. So the why is really for cocktail party conversation. So Dwight, there's a lot of talk about the YouTube recording and whether it's live or what have you. So maybe you want to direct people to our YouTube link. Daniel says, when going short, are you using CFDs or options or both? So I typically short the stock or I buy options. We really don't have CFDs in the United States. It's more of a European structured product. So I wish I had CFDs. That's just a leveraged way of doing it. But options are a leveraged way, but they're just too risky, and they have time value. So I wish we could do CFDs, but we can't. So I usually just sell the stock short, which I did in Tesla, or I buy puts or calls on shares. Joseph said, is Elon Musk buying Twitter going to affect anything in the market? Well, I think it affected Tesla in that he's got a margin his stock. But again, Tesla was going to go to where it's going anyways because the patterns told us. And it's just interesting how the patterns form. And then some catalyst comes out, sometimes later, and we say, oh, that's why it went down. So Amazon put on a top, in this time frame. And on Thursday we'll get the news, and it'll go down, and we'll go, oh, it went down because it was the earnings of it. Well, this was already telling you. And same thing with Tesla. Yes, Elon Musk buying Twitter. I think we'll have a short-term overhang on Tesla, but that's it was already priced into the stock. Just on a visceral front, I'm just glad he's doing it to change the debate in the public square, because all of these social platforms are controlled by, very left-leaning billionaires with a certain agenda. So I'm glad that we have some balance without investing in a political debate here. I hope he succeeds. So Mark says, people who give Musk credit for moving the charts don't understand the charts. Well, for some time, I think Elon Musk, based on, personality and force of nature, I think, people are in Tesla just because of this guy's dynamism. But eventually, the rubber meets the road. And, the companies are ultimately worth the present value of their discounted future for, their discounted cash flows, future cash flows. It's physics. A company, has to be valued based on its ability to produce cash flows. And then you put a valuation on this. And despite the fact that they're knocking it out of the park, Tesla's valued at about 100 times next year's earnings. So it's already priced in how much they're going to be earning, how many cars they're going to be making, whatever. And the market is trading at 100 times that valuation. And so they could meet all of those things And let's say instead of being valued at 100 times, they're valued at 50 times, which is still an enormous thing. This stock will get cut in half, and they could still meet all of their bogeys. So people get caught up in all this crap, but this is about multiple compression, right? This is, stocks have been trading at 20 times sales, not earnings, sales. So these multiples have been just extraordinarily off the charts in terms of just egregious and excessive. This is a bleeding out of excess valuations, pure and simple. It's not about, the Fed and whatever. These things have been trading at excessive valuations based on hype and promoters and bullshit. And now, the rubber's meeting the road. Let's see, I was seeing the big picture in a chart. No indicators like taking a breath of fresh air compared to what I've been looking at for the past few weeks trading a live account. Amazing, Mark, really making me take a step back and rethink my strategy. You're welcome, Albie. All right, anything else you guys want to bring up before? What is the expiration date? So I always just go like the week out. So when I was trading these UVXYs, I'm trading Friday this week, because you start going to the next week, it gets, much more expensive. So I was so it's a race, race against time. I've got to meet, my bogey. So I paid 92 cents on these $15.50 calls, which meant my break even was around $16.50. That was the break even. Now this thing's trading at almost 18 bucks. So, I've got $2 in pure premium on that, but it's a race against time. So you need to be right about something and then right now. So the frustrating thing about options, and it's happened to me many times where I'm right about the move, but if it doesn't happen that week, you can lose a lot of your premium very, very quickly. So you have to be right about the move and then right about the timing. But there are other options that afford you a little bit more time. IGV is usually about a month ahead. So these options, expire May 20th. So you still have about, a month before they expire. So, but that's why they're also a little bit expensive. Yes, I'll discuss the book tomorrow, Joe. Do you trade options for 2 or 3 days? So yeah, if I get explosive moves, I could have gotten out today and made 300% on my UVXY. And then, so tomorrow, when it opens, I'm going to blow out some of them. At some point, you just got to take the profits. Do you ever do 8 to 12 month options on indexes and buy way out of the money? I should, but they're so expensive. So I don't really do that. Prashant says, this is my 4th time joining your sessions. Tremendously helpful. Thank you so much. You're welcome. Any Forex trades? Yeah, I'm sorry if so I've been telling people to short the euro. The euro, to my mind, is going to parity. And again, it really comes down to, patterns. And we've seen a pattern in prey. So you can see this very profound double top head and shoulders in the short term at 115. I said when it broke there that we're going to go lower, and you can see we're at a major support. But if you go all the way back to the monthly and look at a 15-year chart, you can see that this thing has just been tracking lower and going lower. And I think, we're going to go a lot lower on the euro, maybe 80 cents again. So how can, it's very hard to make these predictions if you're looking at a 15-minute chart. So this is a, chart going back to July 2008. And this thing has been in a huge descending triangle. And now we're about to break all these lows. So I think we're going a lot lower on the euro. And I've been saying to our members, you know, path of least resistance is lower on euro for a long time. And so now we may have, you know, some support coming in here, but I think this thing looks like it's gathering steam and looks ready to crash. So I think the euro will be at parity before not too long. So Ellie says, do you pay any attention to the Greeks like delta and theta? I really don't. I don't pretend to be an option expert. I buy options based on what I think the underlying instrument looks like it's going to do. So, you know, to my mind, yeah, I just look at the patterns and the price action to kind of project where something looks like it's going to go. And again, it's all about timing, and you have to have explosive moves in order to make those options work. So I'm usually just looking at the, you know, the metrics of the underlying instrument. All right, guys, I'm going to leave it there. Thanks for checking in. I will see you tomorrow, 4:30 Eastern Standard Time. Have a good day. Stay safe tomorrow, and we'll see what happens. Bye-bye. You guys are welcome. Thanks, Soren. Appreciate it. Thank you. Thanks, Dwight.
All right, Mark. See you tomorrow.
See you, man.